Welcome back to Market on Close. I'm Marley Caden. Just a few minutes left in the trading day, so that means it's time for the big picture. We'll bring in our team from Charles Schwab, of course, talking about the Fed today with Mike Townsend, the Managing Director of Legislative and Regulatory Affairs at Charles Schwab. Mike, thank you for being with us today. A perfect day to have you. Let's start just with your reaction to the Fed decision overall.
Yeah, Marley, I don't think there was any big surprise that they left the rates the same. A little bit of a surprise that there were two dissents. First time since 1993 that we've had two governors dissent, although that also was signaled kind of ahead of time. I think the market was a little disappointed, obviously, that the chairman didn't give a stronger signal that maybe a rate cut was coming in September. But you and I both know that's how this chairman plays. He wants to leave all options on the table. He wants to see the data. I think the whole Fed wants to see the data. And so, we'll see where they are in September. It was interesting to watch sort of in real time the kind of odds of a rate cut in September as he was talking dropped. I think it was about 70% before he started talking, dropped to below 50% while he was speaking. So, there's a lot more data to come here, and we'll see where they are in September. But I think we still expect a cut or maybe two cuts before the end of the year.
It was interesting. I was just talking off camera about how that number had dropped so significantly when I thought it was about 70% yesterday to pull it back down. Were you surprised at all? Sort of some of the more hedging language that was used and absolutely no indication of a September rate cut at all, when I think the market was really hoping to get even a small hint that there was one coming.
I think you're absolutely right. I think the market was hoping for that. But, Powell always plays this very cagely. He doesn't want to signal anything too far in advance. We've got now a couple months until almost 2 months until the next meeting. I think he wants to wait and see what the data says. And, we saw the GDP numbers earlier today, which were pretty robust. But when you combine the quarter two GDP with the first quarter negative GDP, you sort of get this almost smoothing out of where we are in the after the first half of the year. I think that's indicative of how the numbers kind of move around in this uncertain atmosphere around tariffs and other implications that are going on. So I think that's why the chairman didn't really give any signal that the market maybe was hoping for, that there'd be a September rate cut. I think they really want to see the data that's going to come between now and then.
And you mentioned GDP, so let's talk about that. We had the headline numbers, but was there anything you noticed underneath the surface?
Yeah, I think we could see that consumer spending went up, but business spending went down. And I don't think that's a big surprise, or it didn't go down, but it slowed. And I don't think that's a surprise given the uncertainty around tariffs. Obviously, we've got a big day on Friday when that August 1st deadline hits. And I think we'll see tariffs jump on a number of countries. The president has said that countries that haven't made progress on a trade deal, really, I think you haven't made a good faith effort even on trade deals. Those are the countries that are probably going to see those tariffs go up. So I think the business world is still waiting to see how this shakes out. I think they've probably got a little longer to wait and see how it shakes out. And so that's why you're seeing a little bit of hesitation on the business side to spend, to hire. And that was maybe the most notable softness underneath the headline number.
Yeah, there are a lot of, tariff-related concerns about what those are going to be. And, that, I guess, leads us perfectly into the inflation numbers coming out tomorrow. What are your expectations there? Certainly not going to influence the Fed at all this week. But, Jerome Powell made mention of them numerous times that they will get two prints in between now and their next meeting. And those could potentially influence the decision.
Yeah, I think that's exactly right. That's why I think he was so hesitant to kind of give any signal one way or the other, because they are going to get two more data points between now and the next meeting. And, that clearly they're still uncomfortable with inflation being a little higher than they want, and with the trend ticking upwards in the most recent print. So we'll see where we end up tomorrow. I think anecdotally, people don't feel like there has been dramatic increases across the board, but you're starting to see it in different places. And I think ordinary consumers are starting to see it. I think the corresponding data, of course, is going to be what are consumers doing in their spending trends. We saw that bump up a little bit in this most recent GDP data, but does that kind of start to pull back again as consumers start to see something on the shelves in terms of prices going up? So I think this is a really important period over the next couple of months between now and the next meeting to see where the data is really heading.
Mike, we appreciate you being here with us this afternoon to break all the data down for us and the Fed reaction. Of course, that's Mike Townsend from Charles Schwab.